Good afternoon, dear traders. Today, Euro against US dollar in focus. So let's analyze and discuss. And this pair remains under moderate pressure after another failed attempt to establish a sustainable move above their 1.17 area. Technically, the market is still trading inside a broad range structure where buyers continue defending support zones, but the euro still lacks a strong enough fundamental catalyst for a full bullish continuation. The main issue right now is the growing conflict between inflation risks and expectations of slowing economic growth in Europe. Over the past several days, markets have been actively discussing the renewed inflation pressure across the Eurozone amid elevated energy prices and ongoing Middle East geopolitical tensions. Rising oil and gas prices are once again becoming a major factor for the European economy, while inflation expectations continue to move higher. At the same time, ECB officials remain cautious because the Eurozone economy is also showing signs of slowing down. More and more concerns are emerging around a potential stagflation scenario where economic growth weakens while inflation pressure remains elevated. Fundamentally, the US dollar still maintains an advantage through higher interest rates, relatively stable US economic data, and continued demand for the dollar as a defensive asset during periods of uncertainty. Meanwhile, the euro receives only limited support from inflation expectations because the market understands that an overly aggressive ECB policy stance could further pressure European economic growth. And technically, the 1.18, 1.17 and 5 or 1.18 zone remains the key resistance area, and the market has already failed several times to hold above it, while the 1.15 and 7, 1.16 region remains the most important medium-term support zone. At the same time, we are also seeing buyer reactions near 1.15 and 7, which further highlights the importance of this support area. As long as the market holds above it, the current move still looks more like corrective pressure inside the range rather than the beginning of a major bearish reversal. At the moment, the market structure resembles a corrective balance rather than the start of a new strong trend. For the euro to regain a stronger bullish impulse, the market would likely need either easing geopolitical tensions and stabilization in energy prices, or a much more hawkish ECB stance. For now, euro against US dollar remains caught between two major forces: inflation risks in Eurozone and the structural strength of the US dollar.